Okay, so welcome everybody. Um, yeah, good morning, good evening, depending on where you are. So just by way of introductions, my name's Edward Mangles. I'm the regional director of the fixed trading community here in the Asia Pacific region. Um, I'm literally going to mention a couple of housekeeping points before I hand over to Mara O'Brien, who is our Asia Pac regional co-chair for Fix. But a couple of housekeeping points. So at the moment we have 471 people registered, and people are joining the webinar all of the time. Uh, a great response. We have regulators, we have exchanges, buy side, sell side, technology and solution providers all joining the call. So thank you very much indeed. Um, one point, we also have a few sort of media representatives from industry media. Just to say that we run these webinars on a quote check basis. So anything that is said by our panelists, if you want to quote them, please get permission first. And we ask you to respect that, and that's how we allow that's how we share more information. The final thing I'll just say before handing over to Mara is there is a chat function, and we're going to use that for any questions that you as delegates have. Please put your questions in there, and then we will get to those questions in the Q&A session towards the end of the webinar. Enough from me. I'm going to hand over to Mara. Over to you, Mara.
Thanks, Ed, and good morning, good evening to everyone, and thank you for being here. Before we start our discussion, I just wanted to highlight some points. First, this webinar has been brought to you by the APAC Fixed Trading community. There's a sizable audience dialed in, and for those of you that are unaware, the Fixed Trading community is a non-profit, industry-driven standards body that has been and is pivotal to global electronic trading through the fixed protocol development. In APAC, it's also a community that runs the largest, and I'm biased, but the best trading conferences in Asia, including Hong Kong, Singapore, Australia, India, and Japan. FIX remains independent and neutral, focusing on real business and regulatory issues across global markets. And to join this back to today's discussion, we recently kickstarted a 24/7 trading working group, which focuses on the technical details and issues around 24-hour trading. As with all of our working group, it's comprised of our members who put in their time on a voluntary basis. If you want to learn more or you want to get involved with the community, please reach out to Barbara Law or Ed Mangles, whose details will be in the chat. There's been a lot of interest, if not excitement, about this webinar. In fact, it's received the most registrations for such an event in Asia. And the audience includes people and companies from across the world, APAC, mainland, Japan, Australia, North and South America, as well as Europe and Africa. So I expect there'll be a number of questions for the panelists. We do have a Q&A session at the end of the event. And as Ed mentioned, you can drop your questions into the chat and we'll address them time permitting. Okay, let's get started. It's a privilege to address such a large audience spread across the globe on a topic that is rapidly reshaping the global equity landscape, the evolution of overnight trading in US equities. As with the majority of equities markets globally, the US has been perceived rightly as a day market. However, this perception is becoming outdated. The past 5 years have witnessed a quiet yet profound transformation in how and when US equities are traded, largely driven by demands of a truly global investor base and technological innovations. Before we introduce the panelists, allow me to share some compelling data that underscores this shift. The growth in volumes in overnight trading in the past 5 years has been quite incredible. Blue Ocean ATS was the original overnight venue, and I'm using some of their numbers. And in terms of its growth, in 2022, the average daily volume traded was less than 1 million shares. Roll on 12 months, and it grew to around 11 million shares a day in 2023. And late in 2024, early 2025, this number ranged between 30 to 50 million shares. It's just astounding, 30 to 50-fold growth in average daily volumes in just 2 or 3 years. It's quite amazing. Now in Asia, we don't really go by number of shares traded, we go by value traded. So to put that in context, on April 7th, boats had a record day trading nearly 5 billion USD in notional traded. That's close to 7.5 Aussie, 39 Hong Kong, 6.3 billion Singapore, and 718 billion yen. So it's relevant. Well, this is a high watermark. Its daily trading volumes are comparable, or indeed outstrip many of Asia's national equity markets. And this is just a single venue. But the competitive landscape is heating up. And it's part of the reason why we're having this webinar. While Blue Ocean was the first to offer overnight trading, a number of other ATSs have started to support this type of trading, including Bruce Markets. On the exchange front, NYSE, NASDAQ, and Cboe are now actively pursuing plans to offer their own on-exchange overnight trading solutions. But leading the pack is new kid on the block, the 24X National Exchange, which has recently announced that it plans to go live in September this year. Today, we're lucky to have representatives from firms that are at the very bleeding edge of this nascent and potentially revolutionary market segment. From Blue Ocean ATS, we have their CEO, Brian Heinemann. From Bruce Markets ATS, we also have their CEO, Jason Walich. From the Depository Trust and Clearing Corporation, the DTCC, we're lucky enough to have Jacqueline Good, who's the Director of Clearing Services there. From NYSE, we have got Joshua Birch, who's their Head of Exchange Product. And last but by no means least, from the 24X National Exchange, we have their Head of Equities, Paul Adcock. Thank you all for being part of this discussion. Now, before we ask the panel any questions, given the subject and the companies involved may be new to many in the audience in Asia, I thought it would be worth getting some color from the panelists themselves on what your company does and how it relates to overnight trading. And I'd like to start with Brian.
Okay, sure. Well, thanks for the opportunity. Appreciate you putting on this panel. So Blue Ocean, as you described earlier, we are the first alternative trading system to go live back in 2021. We trade all U.S. national market system stocks from 8 o'clock at night to 4 in the morning. We clear and settle all of our trades via DTCC. So if trading something on a national securities exchange during the daytime hours here in the States, you can go ahead and get out of that position or create a position in the overnight.
Thanks, Brian. Jason, we'll stick with the ATSs. Do you want to tell us about Bruce and how it fits into to the overnight trading framework?
Yeah, thanks, Mara. Appreciate you having me here today. As Mara mentioned, I'm Jason Walich, CEO here at Bruce Markets. Similar to Blue Ocean, Bruce Markets is an SEC and FINRA registered broker-dealer operator of the Bruce ATS. We are an alternative trading system operating 5 equity sessions a week, 8 p.m. to 4 a.m. Eastern Time. Our technology is provided by NASDAQ, so we are running our matching engine and data distribution on exchange-grade technology and distributing that data in partnership with NASDAQ. We are backed by a consortium of industry leaders, including Fidelity, Robinhood, Webull, Tasty Trade, NH Investment Securities, Apex Clearing, and NASDAQ as well. So we are approaching the space, where Brian and the Blue Ocean team have really pioneered and showed the value of 24-hour trading, both domestically as well as internationally. And we are, excited to participate in what is really this transformation underway from what has been a one market ecosystem to a multi-market ecosystem. And excited to talk a lot more about that today.
Right. Thanks, Jason. Jackie, how does the DTCC fit into this overnight trading?
Thank you. Hello, everyone. Jackie Goody, Equities Clearance Product Management with DTCC. I'll give a brief little intro for what DTC's current role is and then our role in overnight trading. So DTC plays a central role in the U.S. equities market, acting as the infrastructure that ensures trades are cleared and settled. DTC acts as the central counterparty, or CCP, through its subsidiary NSCC, the National Securities Clearing Corp, handling virtually all broker-to-broker equity trades in the U.S. As interest in near round-the-clock trading of U.S. equities continues to grow, DTC is meeting this demand by extending clearing hours to support our clients and further strengthen the safety and soundness of the markets. NSCC will increase clearing hours and and operate 24/5 to support extended trading with implementation targeted for Q2 of 2026. This is subject to regulatory review and approval.
Thanks, Jackie. Josh, over to you. Where does NYSE fit into this picture?
Thanks, Mara, and thanks for having all of us. It's great to be part of this panel. Good morning, good evening, good overnight to all the participants on the line as well. My name is Josh Birch. I oversee product development at the NYSE for our 5 equities exchanges and our 2 options exchanges. We're looking to break into this market. As you noted, Mara, we petitioned the SEC in October of 2024 to have a 22/5 operating market. We look very much to be additive to what Brian and Jason's firms have done in really trailblazing overnight trading in the U.S. Currently, our flagship pre-market SRO, NYSE Arca, trades about a third of the pre-open shares traded overnight, between 4 a.m. and 9:30 a.m. today. So we feel like we're positioned to be additive and extend those hours and provide diversity to users and participants who want to trade the overnight market.
That is great. Thank you very much, Josh. And Paul, 24X National Exchange, you're the new kid in the block, as I mentioned. What's your part in this framework?
Sure, yeah, I'm a new kid on the block, I guess, but my background, I've been in the electronic equities and options, electronic trading for 25 plus years. I love being on this panel. Everyone here are good friends of mine. So, and I love the fact that Arca is still a leader in the pre-market and post-market trading. I was one of the few guys that started that in the early 2000s in the pre and post-market. So I feel like I'm really set up to help expand the hours to the overnight. So the background of 24X started in 2019. Dmitry Galanov, it's a Forex trading firm in emerging markets. Dmitry contacted me in 2021. I've got this idea. What do you think? And we started on our mission of creating the first fully electronic U.S. national exchange to offer 24-hour trading. It's been a long road, 4 years for approvals. But our mission is to extend the U.S. market access beyond these traditional hours and join others on this panel to create a market that's going to be really supportive to that APAC region, which is why we built this.
Thanks, Paul, and that sets the stage very well for the actual questions that we put together for the audience and yourselves. So the first question is really, how does overnight trading work? And are there differences between the exchange and the ATS's function in the context of overnight trading? Might start with Brian on this, given that Blue Ocean has been in this market for a while.
Yeah, so it's fairly simple right now, but it's going to become more complex as more ATSs and exchanges get into it. So we basically acted as an island, right? We had our own matching engine. We matched buyers and sellers in price time priority. We batched everything up and sent it to DTCC when they opened up. It used to be 4 a.m. Eastern time. They moved that up to 1:30 a.m. Eastern time. And then for trade reporting, we send everything over to the NYSE trade reporting facility at 8 o'clock in the morning, right? So everything clears and settles the way it does during the daytime hours. I would say the one little nuance there is that when we start trading at 8 o'clock at night, that's really considered a next day trade. All right. So anything done between 8 and 12 is next day. will clear trade date plus 1 day after that. So that's the way the landscape looks today. But as Bruce and other ATSs get into the space, we're going to have more competition, which we welcome. At that point in time, I think we're going to start to introduce order routing, where we'll always check our book first. If we have an execution, great. If not, we'll read the data feeds of the other alternative trading systems and route that out. When the exchanges get into the overnight trading or the 23-hour trading, it'll be a different story. But right now, for the foreseeable future, it's the alternative trading systems, and we will interact with one another to ensure that our customers get the best execution.
That's great. That's excellent color. I might ask Jason just on what an ATS is, because again, we're in Asia here. Some of this language is new to us, and could you give us some color on just like how ATSs function, and why you're an ATS and not an exchange?
Sure. So as Brian mentioned earlier, ATS is an acronym for Alternative Trading System. There are 30, 40 different ATSs in the US today, most of which are operating during the core trading session. I ran one for 15 plus years called Coda Markets. They serve a core function, which is similar in some ways to an exchange in the process of matching buy orders and sell orders and essentially affecting the trade. ATSs, certainly Brian's ATS as well as Bruce Markets, our clients are all U.S. broker dealers as far as direct interactions. So the broker dealer subscribers essentially are able to send orders to the ATS electronically based upon, for Bruce and as well as for Blue Ocean, based upon price time priority. Those orders are matched within an order book. Execution reports are sent back to the participants who can in turn share that information with their customers. And we in turn proceed with any regulatory reporting as required. Last sale going to the TRF, which ultimately feeds its way into the SIP, and also getting our trades to DTCC for clearing and settlement, as Brian suggested. So it's really the core function there is that of matching buyers and sellers. Interestingly, if you kind of look back in time when I first got into this business, and as Paul mentioned earlier with ARCA, there was this concept of an ECN, which stood for Electronic Communications Network, which was essentially a displayed alternative trading system. And over time, what occurred in the US is you saw the exchanges recognize very impressive technology solutions that were capable of handling the increased message traffic that was seen in the marketplace with the introduction of high frequency trading and systematic liquidity provision. Ultimately, those ECNs at the time, ARCA being one of them, was acquired by all of the exchanges. And you saw what was at the time displayed alternative trading systems become really a component of an exchange, and then an exchange themselves. So what surfaced over the next few years was this concept of a dark pool, which essentially is a non-displayed alternative trading system used primarily to reduce market impact for larger institutional orders. And we saw really a proliferation of those types of venues throughout the early 2000s. Now recently with a few ATSs, we've seen this resurgence of a displayed ATS, or previously, sort of referred to as an electronic communications network. And that's, with the retail-driven market demand for overnight trading in the U.S., or really 24/5 trading, certainly with a large amount of that coming out of APAC. We need to put prices on the screen. Quotes need to be displayed to retail investors so they know where the market is at. This is a limit order driven market. And so with that distribution of data, we've seen really, as I mentioned, this resurgence of the displayed alternative trading system. And so that regulation, again, it's regulated by the SEC. It is a product of a broker dealer. And we go through a process known as Form ATSN, which is a public filing, which essentially discloses the operational details and kind of corporate specifics to each operator of an ATS. Those are available on the SEC website for anybody that's interested in reading them.
That's a brilliant breakdown, and kind of interesting that, we roll on from ECNs however many years, 10, 15, and it's the same thing is coming back because of this overnight trading with displayed quotes. Josh, given from you've got a product hat at NYSE, from an exchange perspective, is there any context or anything you want to highlight about the difference between ATSs and exchanges in terms of overnight trading?
Sure. Yeah, and I think it's important to understand the current landscape and given Paul is the godfather of this, maybe he should be the one to explain it, but I'll do my best to give context and he can poke holes in it. But currently the construct for the NYSE Arca is the core session is 9:30 to 4 o'clock. The pre-open session starts at 2:30. You can send limit orders. They'll be entered and queued until the limit order auction commences at 4 a.m. At 3:59, we begin an opening auction freeze period. Auction starts at 4. You can trade on NYSE Arca from 4 a.m. Eastern all the way to 9:29. We then, impose the market order freeze period, and at 9:30, the core auction takes place on Arca. So as Brian kind of mentioned, the simple hours-based trading on the ATS side, it's really, in today's world, pretty simple on the exchange side as well. At 4 p.m., the core session closes, and then the post session, we call it the post session, begins at 4:01. Market orders are canceled. That lasts until 8 p.m. 8 p.m. is obviously a key demarcation time for the context of this call, because as Brian mentioned, that's when trade date, settlement date starts to flip, and you begin to look at the T0 versus T+1. So today, that's the operating hours. Obviously, as we look forward to a world where we trade 23/5, 24/5, and beyond, that time will shrink, right? We'll go from 2:30 order submission to a world where we trade, continuous till 8 p.m., take a break for an hour, 9 p.m., you start again and trade for 23 hours continuously. You asked about some of the differences between an exchange and an ATS. I think most notable from the exchange side is that we operate and only operate, and this is just speaking for the NYSE, when DTCC, the central clearinghouse, is open for operation. Unlike ATSs, we do not have a clearinghouse associated with us. So we match a buyer and a seller. The trade is executed, and it immediately goes out for clearing. I reference that only because it's important to why we, back in October, recommended the trade hours that we did as a starting point for 22/5 with a trade break in between that at the time lined up with operational hours at DTCC. So that was driven more by wanting to align with central clearinghouse hours. As Jackie mentioned in her intro, as we look forward to 2026, that'll be expanded around the clock. And I think, all of us on the call are very excited about having that service be continuous throughout the day and night.
That's super. That was fantastic color, Josh. And Paul, I know you've kind of lived this for 25 years. What are your thoughts on it?
Yeah, so my background, the Arca, so I was one of the founders of Archipelago. And the great thing about ECN or ATSs is that if you find a market niche or a gap, you can fill it in like 6 to 9 months as a BD versus an exchange, which can take up a couple of years. But why I'm really so passionate about this, like I think overnight trading is about ready to evolve into like the ATS offerings that we have today, but it's going to go into like a broader multi-venue, multi-participant ecosystem. You're going to get exchanges with A-grade platforms, market infrastructure with the SIPs, DTCC, and investors adjusting to to 24/5 and eventually beyond. in the U.S. landscape. It's pretty exciting times.
Yeah, definitely. And it's again, the reason why we're having this webinar is it's the whole conversation around 24-hour trading in Asia has really, really picked up, not just with retail participants and market makers, but across the board. So thanks for that. Now we'll move on to the second question, which is what challenges are there to a seamless 24-hour trading platform, from trading on the venue to execution to clearing and technology? And I might start with Jackie, because given that DTCC is the kind of plumbing to make a lot of this work, I just want to get your views on what significant issues are there and what sort of timelines are there around the resolution of these.
Sure, thank you. So I'll share some of the ways, right, we're actively partnering to work through the industry challenges that are being raised. So DTC remains committed to supporting the industry's evolution toward 24/5 trading through active engagement and collaboration, and by participating in key forums, including industry working groups, SIFMA subcommittees, and exchange and ATS working groups. DTC is helping to address open concerns and ensure operational readiness. These efforts are focused on fostering alignment, enhancing resiliency, and supporting a smooth transition to near continuous trading. SIFMA continues to guide the industry through this transition, building on earlier draft recommendations. Right, they've posted a blog post, right, that highlighted the need for a centralized time for when the trading day ends, and as well as a pause, right, that's been suggested for exchanges. While exchanges have agreed to a unified trading window, again suggested from Sunday 9 p.m. to Friday 8 p.m. Eastern Standard, several areas still require industry coordination. Some of these include establishing a daily market-wide pause, refining corporate action processing, and harmonizing exchange trading sessions. SIFMA is leading working groups that DTC is partnering on, focused on infrastructure, trade reporting, settlement timing, supervision, risk management, and corporate actions to ensure a coordinated and resilient transition. DTC is actively preparing for the transition to 24-hour trading. We're enhancing infrastructure, support models, and risk management capabilities. And to ensure system resilience, capacity stress tests are being conducted. And while Sunday market activity will be supported through the existing 24/7 application coverage, investments are being made to strengthen global client application support with a focus on building expertise outside of the US. Additionally, risk management systems are being upgraded to handle extended trading hours, including enhancements to trade ingestion, reconciliation, and workflow processes. DTC will continue to play an active role in these efforts, partnering across the industry to support innovation and resilience.
Thanks, Jackie. That sounds like a lot of work, to be honest. It's not cats. It's not an easy lift. So, yeah, no, that's really good, and gives the audience and myself a view of like this is not easy to kind of get over the line, and there's a lot of work and a lot of planning needed. So, thank you for that. I might pivot back to Paul, given that again. You've been around since the Archipelago, and you as a member of the 24X Exchange has had to go through a lot of work and challenges to get your platform up and running. What do you see as the challenges to a seamless 24-hour trading infrastructure across any of the things we mentioned, from the venue, execution, clients, technology? Yes.
Yeah, I thought it'd be maybe interesting, kind of how we came up with this. Like I said, we started this whole process 4 years ago, and it basically came down to Dmitry Galanov, who's the CEO, reached out to me in 2021 and said, "Hey, what do you think about overnight trading?" He was building his Forex business, traveling around the world, and was constantly being asked, "Hey, we'd really like to trade Apple and Microsoft and Tesla in our daytime." And interesting enough, I'd been talking to my old firm, NYSE Arca, that if the SEC ever approved any of these crypto ETFs, right, that could be a catalyst to start expanded hours. But also the CBOE is going to begin trading, their exclusive products at the end of 2021. So then you're going to have a situation where a layoff platform is going to be needed. So that was really our idea about getting this all started. And it wasn't until I started working on the 5-year assumption process and analysis of what the business could look like. I'm like, duh, there's 4.5 billion people. They're in the APAC region. Like this is now a numbers game, and got me excited. So it was literally a journey, a 4-year approval process. We went through 2 Form 1 approval processes. First one we had to pull because they demanded Reg 601, 602 be in place, which is real time, wasn't trades to the SIP. So we started a year-long process with what was called a 24-hour committee with other SIP participants, and we ended up getting unanimous approval from the SEC commissioners back in November. So what we've done, instead of building the technology ourselves, we chose MEMX, Members Exchange Technology. They'll be a technology provider. I'll have my own market operations and trade support, SRO, and running the day 4 a.m. to 8 p.m. operations. And then once the SIP delivers, it's going to be one big overnight party for all of us here on this panel. And hopefully the SIP will give us something fairly soon.
Right. An overnight party. That sounds pretty good to me. Thanks for that, Paul. And I might just hand over to Jason. Like, Bruce is relatively new in this space, is my understanding. Like, what have you seen as being the challenges with, getting your platform up and running, and looking towards the future, the challenges that the other guys have spoken about?
Yeah, you're absolutely right. Yeah, we are fairly new. We launched in March, and like anything, things take a bit of time, right? This is a game of putting in a significant amount of infrastructure amongst a network of clients and market data distributors. The good news is that's largely underway, and we're excited about what's to come in the next few months. Look, having operated in ATS for a number of years, I learned a lot. And a few of the things that I took away that were key to our mission at Bruce, one is trusted technology, right? Your technology needs to be best in class. People need to feel confident that their customers, their investors, are going to have a good experience. And that is one of the reasons we partnered with NASDAQ. Along with that is operational excellence. The team that we've put together, seasoned industry veterans, excited about this business, committed and ready to build out what will become sort of this next evolution of the overnight market structure. And then the other key piece is really just making things easy, right? And so that comes with technology that's easily integrated and market data that can be easily consumed. Our market data is probably the globally most recognized market data protocol there is with NASDAQ ITch. They have a significant network of clients on the market data side consuming their NASDAQ basic product in Asia and Europe, Latin America. So certainly while there is incredible value for the APAC region for 24/5 trading, this is a global phenomenon. This is something where there will be value for all, because time zones are really being broken down, and it's becoming a not only a matter of convenience and optionality, but also of efficient portfolio management. So making sure that we can streamline that distribution is key. As far as challenges, even with that, look, it's what we've seen here is the market as it exists today. Brokers approach this in a manner that was designed for a single market ecosystem. And whether or not that was short-sighted or not, this is the case. And everyone is essentially recognizing this theme that you've heard all of us talk about tonight, which is we need to migrate from that one market ecosystem to a multi-market ecosystem. The redundancy of that brings so much value, one, for the security and that the assurance of that positive customer experience, but market level competition also helps drive innovation. It helps drive compressed spreads and better prices, ultimately benefiting the retail investor at the end of the day. So, there are so many benefits of what's to come. but this transition is not going to be able to be accomplished without the participation of the brokerage community, of the clearing houses, of the market data vendors. And the good news is that is underway. So I'm excited for that. The other piece is there's there at the end of the day, there's just some confusion out there, right? There is we started this in a very, I think, constructive manner, talking about what is an ATS, what is an exchange, how are they different? And I think, as people are racing to get into this space, and there are different requirements for an exchange to be live during the overnight trading session than there is an ATS, without all of that information represented and available in a very clear fashion, it has created some confusion in various regions around the world. And part of our goal is to make sure that people have a crystal clear understanding of what an ATS is, what an exchange is, a more strong and robust understanding of our market structure overall. And at the end of the day, if there's going to be an increased amount of of foreign assets into the U.S., I think we're at 17 trillion at this point in U.S. equities, right? Having a deeper understanding of our market structure and our regulatory framework is essentially essential to ensuring, again, a good customer experience for brokers in APAC and around the globe.
So, Jason, just to be really, really clear, to highlight your point there, ATSs are functioning today, right? You got Bruce, you got Moon, you got Blue Ocean. We're out there, we're trading, we're clearing, we're trade reporting. Exchanges do not exist in the ecosystem today, right? They're not approved to trade in the overnight. That's not going to happen here this year. 24X is approved to go live, right? But that's, I think, for a 16-hour period. And there's a variety of factors that have to take place that Jacqueline highlighted earlier, like DTCC going live 24/5, having real-time trade reporting, having the SIPs go 23 hours a day, and then having brokers handle the real thorny issue around corporate actions and how they handle a corporate action at 8 o'clock, and can they get that processed and make changes to the customer's orders and make the changes in the customer accounts in that hour time period, right? So right now it's just alternative trading systems, and the exchanges can go live when at least those 4 items are addressed down the road. Is that correct?
That's my understanding as well.
Okay.
I might just expand on what Brian said, because it's really important. Like when I started on this project, there was a few things that really bothered me about trying to make this happen. And one of them is corporate actions, right? You don't want to be trading the stock at a wrong price where all the smart guys know what's going on and retail is getting dumped on. So there is a change notice that was created by MEMX that's going to require the primaries to give that information on the symbol to the SIPs, and the SIPs will, as we then pull in our symbol load, as you get that stream of XYZ symbol, it'll tell you the price increment, minimum size. Is there a corporate action? If there is a corporate action, how is it to be processed? And the computers are going to be doing all this versus looking in 2 or 3 different places and trying to figure out what should this corporate action really look like when we're starting to trade it. So I think that's a really important point, Brian, that you brought up, and that will need to be accomplished before we go live overnight.
Yeah, and just to level set so everyone understands, when there is a major corporate action like a 2-for-1 stock split, again, we're trading next day at 8 o'clock p.m. Eastern time. What we'll do is go ahead and halt that security. So if Tesla's doing a 2-for-1 stock split, we'll halt that security for the overnight session. We'll have the exchanges pick it up the following morning, and then we'll start trading it the following night. It's not the most elegant solution, but when we started 4 years ago, that's what our subscribers requested. Nobody wants to trade a security at a wrong price. And that was the safest approach at that point in time. I think the exchanges are working on a much more elegant solution going forward.
Really,
and just
sorry, jump
just
in.
to add to what Paul was mentioning. Oh, sorry, Mara. Yeah, just to add to what Paul was mentioning, the syntax for communicating that will be harmonized. I think one of the complaints and complexities that exist today is the exchanges can disseminate information, whether it's to the SIP, whether it's on one of their prop feeds, and they do it in their own language, so to speak. So if you're a participant that consumes that information, you have to be, fluent in a number of different languages to understand what that is. One of, I think, the very positive byproducts of the 24-hour SIP committee is that we all agreed that we should harmonize that language so that for a corporate action specifically, when we're communicating that out to the street, it'll be a single language. And that framework, I think, will be easier for participants to consume. But more broadly, I think we need to really be mindful of, as you asked about some of the challenges that we face. The NYSE, is a bit unique on certainly on this panel because we're a listings exchange. So while we're all very, very keen on the transactional part of what a 23/5 or 24/5 world looks like, we get the added benefit, or sometimes not, to have to then talk to an issuer about why there was a corporate action, why there was a halt, why something happened with their stock, and all of a sudden you're on the phone with the CFO at a company, and they have a lot of questions as to what happened operationally, how was that handled mechanically, and to Brian's point, right now tens of thousands of corporate actions are processed a year, at the exchange level that happen between 8 p.m. and midnight. That's great because markets are closed and people have systems that can account for that. But in a world where there's, for all intents and purposes, continuous trading, then you have to kind of learn how to fix the plane as you're flying it, and make sure that the information is disseminated, processed, consumed, and applied in a very efficient manner for all participants. So as a listings exchange, and but I know there are others out there, we're very, very sensitive to how corporate actions are going to be handled and disseminated, so that those consuming it are doing it in an efficient manner.
That's really, it's really interesting, and it just expresses a lot of challenges that are facing a growing market segment. Like, given what Brian said about the difference between ATSs and exchanges and the work that needs to be done across a range of different participants, like, what's a feeling from the exchanges as to when you're likely to be able to support, like, 23/5 or 22/5 or whatever the timing is?
So I'll go first, and Paul can certainly chime in. Paul and I are both members of the SIP operating committee. So while we both can provide information and viewpoints from wearing our exchange hats, I'm happy to give kind of my speculative view from being on the SIP committee as well. All the participants tonight have kind of mentioned in one way or another, some of the barriers that exist for exchanges don't exist for ATSs, and it's painful. Paul can speak to what he had to go through just to get approved. For better or for worse, everything we do has to go through the commission, has to get approved, needs to be filed. There needs to be a comment period, and it's a very iterative process that takes time. To your direct question as to when, the $60 million question as to when we think this will happen, why don't I start just by giving a little bit of a lay of the land as to where we are as a committee, representing the industry, and not just SROs, but also advisors, SIFMA, the SEC, and other participants that kind of form that committee. This summer, I'll go back to the spring, we proposed a 23/5 market. I think that's been fairly well publicized, with a break between 8 p.m., 9 p.m. Eastern. The next step was for us to formally submit that to the SIPs, the UTP, and CTA, for them to take back and tell us how long it's going to take, what's the scope, when can they have a 23/5 operating SIP to disseminate trade and quote information to participants. I expect, don't hold me to this, my guess is we'll get some feedback from them right around Labor Day in the US, so that's early September. I did cheat, and I took a quick glimpse at some of the Q&A that came in, so maybe I'll knock out 4 or 5 by giving this answer. But if you were to say, and Brian, I think, kind of hinted at this, if you were to say, when will we actually be live with an operational 23 by 5 market in the US? My guess would be best case late 2026. And I think that's a best case. I will say one thing. NYSE Arc is right now the only SRO that's been approved for a 22 by 5 model. That's what we submitted in October. So all the SROs at some point are going to have to either file or refile and submit to the SEC for what will presumably be the 23 by 5 operating model. I don't think it'll be controversial. I don't think the commission will have an issue with it, but I think just so people out there have context as to the next steps for all of us to be harmonized, there's quite a bit of operational and paperwork that needs to be filed between now and whenever we go live.
Fantastic.
Yeah, I'll just add to that because Josh and I, we both had to be very careful when we try to give out timelines because everything is under NDA. But I just want to make a point, and this is out there quite a bit. Like the SIP has long carried a reputation about underperformance, particularly when it comes to any timely delivery and responsiveness in our industry. That being said, I don't count them out on this one. Like there's a growing recognition within this industry and the plans themselves, their modernization is overdue. And with the regulatory attention, the market pressures, the SIP's gonna deliver this in a timely manner. And if you're making a bet that it's going to be 3 to 5 years, I think you're going to be wrong.
Yeah, I would add
it's
that
coming.
Perhaps the SIP could be ready, and as Josh said, maybe late 2026, and we all know the history of the SIP, so I would take the over on that. But it's really the other items, right? It's the corporate actions, right? And it's things that are beyond the control of this group here or the CTA and the UTP committee. It's the brokers and how they're going to get their hands wrapped around the corporate actions and process them in a timely fashion. I think that's really going to be that's going to be the issue that holds it up.
Yeah, and I don't want to dominate here, but I just want to add one point with the industry. Like I would tell you, like something has changed in the last 4 to 6 months. Like the big banks went from, we're going to wait and see to they're now moving forward very quickly on figuring out how are they going to staff, where are they going to, where's it going to be located? Like, and I think what's going to happen is the institutions are going to be in the same situation. They're going to look at how quickly things are moving. You've got increased volatility in our markets. You got 3.5 more years of Trump and his administration. And I think it's making things happen a lot quicker than the industry ever thought it would happen.
Yeah, but they don't have to wait for the exchanges for that, right? They're jumping in because the alternative trading systems are doing it today. We have 110 market data subscribers globally. We're in 20 different countries. We're not in one country in APAC. We're in 20 different countries, right? We have 50 broker-dealer subscribers in the US. That's why I think you're seeing the big banks move now, right? Like this is not just, the exchanges are coming in a year and a half or 2 years. Let me get my desk set up. They're coming because Blue Ocean and the other ATSs are trading, clearing, settling, and trade reporting today.
You're absolutely right. I mean, Brian and I were in an event with a largely institutional client base, and we watched the tone transform and evolve during our panel session, right? We talked about what's going on, the mention of a 5 billion in notional session in a single overnight session, and light bulbs start going off and opportunities, whether that's the ability to reduce risk against retail order flow, which in the US, we do have a situation where retail and institutional flows are somewhat bifurcated in the core session market structure. So if this is a solution that is bridging a gap, but again, creating those opportunities, whether that's from a risk reduction standpoint or an opportunistic, we're going to see people start running at it. And I'm with you. The banks have changed their tone. The institutional community has gone from largely dismissive to very curious, if not pushing their brokers. Following that panel, we were asked which broker of mine can put an iceberg order in so I can actually participate, up 5% should the market move there. there's opportunities here, and it's really, really encouraging that instead of brushing those off because of workflow concerns or staffing concerns, those opportunities are being explored and vetted. And, I think to Paul's point, we're going to see a race to participate there, largely driven by the efforts of the ATSs that are putting up that volume today.
Thanks, Jason. That was really fruitful discussion. And we're starting to run out of time, but I'd like to get one more question in before we go to Q&A. And that question is related to what you just said, Jason. At the moment, flows tend to be retail versus market maker in the overnight trading world. So I just wanted to ask if the venues will target the institutional client base, which it sounds like you've started to do, or will your focus remain on retail participants? I've talked to a lot of brokers and buy sides in the region about this ahead of this webinar. And one of the questions that always kind of comes up is chicken and egg. What's the catalyst for institutional brokers, institutional buy sides to come on board and really start participating? I might start with Brian, and then we could maybe pivot over to Paul and Josh and Jason.
Yeah, so quickly, not to take up too much time, but for the most part, it's retail flow. We started out all the major retail brokers on the platform, Robinhood and Interactive Brokers and Webull, Charles Schwab. And then we started to see some of the hedge funds come on board and start trading. And now we're starting to see larger, true institutional customers say, hey, why not, leave an order on Blue Ocean and see if I can get something, in my order done in the overnight. And if not, no harm. So we're starting to see that. And I think it's going to come in a big way when we get a little more broad market data distribution. Right now, we use Active and ICE and Refinitiv and Yonhap and Iris, and we're on Yahoo Finance. But there's another big institutional market distributor out there that we're going to go live with. And I think that's really going to be the catalyst for the institutional community.
That's great. And Paul, what are your thoughts on it?
Well, I think the institutions, they require certain things. They're going to require the SIP data to extend overnight. So NBBO less sales. They're going to want depth of book from the exchanges so they can see, more liquidity clarity, you might say. They're going to want SCI platform grade, platforms in place to trade on. And look, we're all, when we all get in here and start playing in the sandbox, we're going to start incentivizing these professional liquidity providers, right, which will tighten the spreads and will make the institutional folks, more apt to come in. And Jason, I think maybe I was at that conference, and if not, just a real quick story, like one of the big buy side guys, I actually looked at my watch. He bashed the overnight trading for 12 minutes. I looked to see how long he was going to go on. But he said, but if there is something going on in NVIDIA on a Sunday night, I would call my Hong Kong desk and drop an order off. So
exactly.
Check that box.
Yeah. Okay. Well, we're at 10:53 Australian time. So we've got about 7 minutes left. So I might just start pivoting to some questions from the audience. One of them, and it's been in the news quite a bit, has been about tokenization. Tokenization has been unsuccessful at making meaningful headway in the activities of exchanges and ATSs. Might 23-hour trading change that? Josh, is that a good place?
Listen, I think, to me, tokenization seems to be a solution looking for a problem. If I'm looking at US trading or crypto trading, which is probably what kind of started the momentum with that, I want to crawl before I can walk or run. And when you see some of the stats on how stocks are disjointed, even on a limited basis with tokenization in Europe relative to what's in the US, I think it gives you pause for, is that something that, we want to bite off and chew right now? The second part of that question, I think is a very good question, and we should spend some time on when we have more time, which is overnight trading, maybe a gateway to furthering tokenization? My immediate answer to that would be it could be, right? I think, when we live in a mature world where exchanges are up and running in concert with the ATSs, whether that's 23.5 or 24.5, I think it gives us a better and more fulsome view of, beginning to end, right? Trade, clearing, settlement, how quickly can it be done? And is there an appetite and or use case for that to be kind of ported over to a tokenized platform? I'm not saying there isn't a place for it. I just think right now it's a solution that's looking for a problem, and I don't know that now's the time for it. I would just also add, just in picking up on just the last question that you posed with respect to institutions and will they be coming on board. I think one of the things that's very evident to us when we go to and travel through APAC and talk to retail, institutional, market makers, high frequency is there is a clamoring for the market data piece. Jason touched upon it with the NASDAQ. Brian touched upon it. Like I said, when you have a third of the pre-market liquidity, having products like Depth and BQT and Arcabook really is a premium product to offer, and we're seeing quite a bit of momentum from customers that originate with the market data side because more information is helpful to them on the trading side. So I just wanted to throw that in there because I think it's very relevant to kind of the workflow and life cycle of the 23/5 market. But I don't know if others have opinions or thoughts on tokenization. I just kind of threw that out there from an exchange point of view.
I think we're coming to the close. I'm going to ask one more question, and it's about what we pretty much all love. It's about revenues. So extended hours have been one of the few areas where trading venues have been able to extract meaningful revenue. With mainstream exchanges, and I guess that's you, Josh, and you, Paul, extending their trading hours, will that not likely compress trading fees for ATS and potentially threaten the business model?
I don't think so. Well, I think, I said it at the outset, and I mean it. I think ATSs or exchanges coming into this space will be supplemental to what ATSs are doing today. I don't think it's a displacement play by any stretch. Will competition cause all of us to rethink, our commercial policy? Sure, but I think that's going to be the case anytime you're in a competitive environment. Just from a pure market share perspective, I don't know that I would call it a revenue play by the exchange by any stretch. Even on the best of days, the overnight session is 0.2% of what we see during the core session in the US. So to say that it's going to be on day one, this massive, impact to the bottom line from a transaction perspective, I don't think is the case. Whether that puts pricing pressure on, the commercial policy of an ATS, I can't speak to that. I would say anytime you're in a competitive environment, that pressure will be there. But I think from day one, I don't think it's going to be a massive revenue play, nor is that, the super compelling. It's a reason, but it's not the reason why I think you see some of the SROs falling into line and signing up for 23/5 or 24/5.
Jason, Brian, from the ATS perspective, do you have any concerns about revenue compression for the addition of competition, or do you have?
Listen, I would say compression will happen as more competitors come in the space, right? We expect that. That's always been the case. But with that being said, the size of the market is really small right now. I think Josh said, 0.2, on a really good night. We do $1 billion or $1.5 billion in notional on average. The pie is going to get a lot bigger, right? So we're not going to be trading 30 and 40 million shares a night. We're going to be trading 1 billion shares in the overnight session. And that's when you'll see the capture compressed. We also have another business out there, a market data business. Like I said, we have, 110 market data contracts spread around the globe. So it's not just about transactions. There's also a market data component too.
Yeah, I agree with Brian. Like the right now we are in such the early stage of overnight trading. With this evolution to a multi-market ecosystem with smart order routing, with that level of sophistication coming to play, we're going to see new participants. We talked about it already on the institutional side, right? The diversification of participants is going to increase the overall pie. The more assets coming in to participate during the session, it's going to increase that pie, and this is going to solidify what this future is going to look like as a true 24-hour trading day. I'll be honest, I got into this business right after kind of decimalization, and was there for the introduction of Reg NMS, our major sort of regulatory framework as it exists today. This is the most exciting market structure evolution that I probably will see during my career. I'm very excited and honored to be front and center for it. But this is really going to be a pivotal moment for our markets, and I think really change the experience for all the investors that do choose to participate.
Yeah, I mean, I disagree with Jason. I'll just say, like with AI and be able to find these cross asset arbitrages and event driven strategies is going to get huge, and it's going to trade 24 hours a day, and it's going to really drive where we're all trying to take this, this new extended hours of trading.
That's fantastic. We do have time for one more question. I'm going to ask Jackie. I guess it's a twofold question. One, what are the risks of, not supporting 24-hour trading from DTCC's perspective, and who does this affect? And then there's been a few questions around, the compression to T+1 settlement in the US versus non-T+1 settlement in other markets. Is there any impact from your side that you see with overnight trading?
Sure. So I'll address, I mean, the current counterparty risk, right? As we've shared, ATSs already are processing trades overnight. They're not able to submit those until we open. So our first phase, we implemented earlier hours. We cut it by 2.5 hours to 1:30 a.m. Obviously, what we're proposing in 2026, this 24/5 model, by extending these hours, will deliver increased client value, not only by maximizing liquidity, but will reduce the counterparty risk, as NSCC will be able to, apply our central counterparty guarantee to overnight activity across different time zones for global participants. So they'll be getting that real-time guarantee from us, while these trades are being executed during this session. The last part, right, is, sorry, what was the second part of the question?
It was about T+1, versus the rest of the world going, still on T+2, essentially.
Yeah, so we've been asked, kind of timing around, there's already a reduced setting when it comes to settlement and T+1 and where there are concerns there. So right now there's not any proposed changes to settlement. So I think Brian said it, these are kind of looked at as next day trades. So when the trading day ends at 8 p.m. from DTC's perspective, we're starting to take these trades in and guarantee them for the next trading day. So essentially it's looking like a T+2 trade when it settles.
Understood. Okay, thank you, Jackie. Unfortunately, we've come to the end of this session. There's heaps and heaps of questions in the Q&A panel, but we can't actually address them. I'd like to thank everybody on the panel for your participation. I know it's getting on in the US, but guys, you do support overnight trading, so it's probably a morning for you guys. But thank you very, very much for your insights. Hopefully, the audience got some good education out of that about what's happened, what's happening, and what will happen in the future. I would like to thank the audience. We've hoped that you've gotten some good views from our great panelists on overnight trading. If you do want to participate in becoming a member of FIX or getting involved in a working group, please do reach out to Ed or Barbara. Other than that, have a good day or a good evening wherever you are, and thank you very, very much for joining. It was a great session.
Nice seeing you guys.
Thank you.
Thank you.
Thanks, everybody.